One of the most challenging things for novice and new investors is planning. Planning out that trading day. What is that set of rules that you follow each day? Well, we're going to look at 4 simple steps. It's awareness, it's evaluation, it's planning, and execution. Let's begin with awareness. First step as you start every trading day is look at your accounts, check those balances, make sure those numbers line up. From there, let's look at all the market drivers, headline news, economic announcements, earnings calendar. Those are the pieces that are going to drive these markets up or down, and we want to know what they are. Now, where are they going to drive it to? Overnight levels are key in helping us understand where institutions are positioning themselves for each trading day, so make sure you check those overnight levels as well. Now, once we get to the evaluation, this is pretty simple. At Online Trading Academy, we operate off a system called Core Strategy, which really focuses on where are institutions buying and where are they selling. Whether that's stocks, options, futures, commodities, real estate, doesn't matter. We have a grid that's mapped out showing 35 different asset classes and a varying assortment of supply and demand zones, which makes our planning process much, much simpler. From there, we can take those supply and demand zones and run them through a planning process, meaning what's our entry, what's our stop loss, what's our price target. With those 3 things, we can now calculate 2 incredibly important factors. What is our risk and what is our reward? Without those variables, you should never make a trade. The last component here is execution. There's a lot of different pieces here, but we'll start with leverage, meaning how much borrowed money do you get? Forex traders, you might get 500 to 1. Stocks, you get 2 to 1. So be careful with leverage. It's a double-edged sword and it can be very dangerous to your account. Asset rules. Make sure you know the rules for each individual asset that you're trading. They vary greatly from instrument to instrument. Also know the order routing rules and order handling rules so that you send your order to the right location and save money in the process. And finally, position sizing. The ultimate tool in risk management is position sizing, and of course, if you want to be successful in this, risk management is rule number 1. Well, when we look at these 4 things, awareness, evaluation, planning, and execution, if we focus on them and we have a plan of attack, we can eliminate all that noise and focus on a straight path to success.